well. It was a good set of numbers that Aether Industries reported, boosted by commercialization of the Site 3 from Q4 and some long-term agreements as well. The company saw a healthy growth across parameters, with CRAMS and the contract business continuing to grow. Aman Desai, who's the founder and director at Aether Industries, joins us now to talk about that. Aman, very healthy growth of 25% is what you saw in the top line. But you also spoke about the pharma segment being subdued in the first half of FY23, and that's something that other, specialty chemical companies spoke about as well. Can you tell us, is there any improvement that you're expecting in FY24 in the pharma space, and what is the demand on ground currently?
Yeah, good morning, Sonia. Pleasure to be here again. Yes, good set of numbers we have posted in the last quarter, which shows a healthy return and healthy growth quarter on quarter, year on year. And so we're happy with that. Very positive and very upbeat on the future outlook. In terms of your specific question on the pharma, yes, the first couple of quarters in the last fiscal year were soft from the pharma sector, but already in the last quarter and the quarter before that, but more prominently in the last quarter, we have seen the demand and the requests from pharma start rolling in and going back towards normal. And so certainly in fiscal 24, we expect to see pharma back into where it used to be last year or a couple of years ago, and post good growth on the pharma sector as well.
Right. So could you just corroborate that with some numbers? If the pharma segment is going to return back to, growth on a consolidated basis in the sense of margins, I mean, you've seen your margin expand to about 30% in Q4. Is this a sustainable number? Could you build on to that as well?
Yes, certainly. So we have always speculated, we always mentioned that, our margins and our profits will be around where they are today, which is 30% EBITDA and 20% profits. And so we expect that to remain. And in terms of the margins being affected by the pharmaceutical getting back up to track, yes, there will be some impact, but not much. But we expect to be posting healthy margins and healthy profits in the quarters to come.
All right, Aman. Now, I recall last month when we spoke, you said, Nigel, you have to wait a little bit longer for the revenue growth guidance. So now you've given us your numbers. What's the outlook like for FY24? Margins, you had mentioned 29-30% is what you want to sustain. So on the margins front, I just want to ask you, R&D as a percentage of sales, that's moved up. And you've been mentioning that that's one of your strengths of the company because you're preparing yourself for the future. What is R&D spends likely to be at for FY24? And also on the top line from the 650 crores odd, what kind of growth can you deliver?
Yeah, Nigel, very good morning. You're always the one with the tricky questions. But jokes apart, in terms of R&D spend, that's an easier question to answer. We have posted, I think, about 7.5% as a percentage of the revenues of the R&D spend in the last fiscal year. And we expect as the overall top line goes up, we expect the percentage of the R&D spend to remain constant. And so as an absolute quantum, we will be spending more on R&D, and we have those plans already laid out for the upcoming fiscal year very well, and in terms of CapEx as well, in terms of the manpower and the R&D. In fact, we are already into plans after having doubled the R&D, tripled the R&D as of last 2 years. We are going to absolutely double that over the next 1 year. And so very strong plans for R&D in terms of growth. And we see the pipeline also correspondingly growing to justify that corresponding growth in the R&D. In terms of the growth in the year to come, in terms of top line growth, we expect to have good top line growth. We have the Site 3 and what we call the 3+ and 3++. And so basically added additional plots of land besides Site 3 already functional. We have the Site 4 that we are planning simultaneously with Site 5. And so significant production.
Give us a number, Aman. Aman, give us a number. Site 3 is on board, Site 4 comes on board. What is it? You did early double digits last year. Should we work with double digits this year as well? Do you want to increase it to mid-teens? And if you could tell us, since we're focusing on revenues, with your current CapEx plan, what is the peak revenue potential? So a growth for FY24 and peak revenue potential. Go ahead, Aman.
Yeah, Nigel. We've always maintained, I think, double-digit growth in the last many years, and we will certainly look at maintaining that ratio in this current fiscal year as well. I will refrain from giving actual numbers. In terms of peak potentials, we have always maintained asset turn of 1.5 to 2, and we are putting in a capex of about, we already put in a capex of about 300 crores, 200 crores in the last fiscal year, and we have plans of 300 to 400 crores of capex in the current fiscal year and the years to come. And so multiplying that with the historical asset turn of 1.5 to 2, kind of gives you the big potential of the new capex that has been going in. And so very upbeat on expansions in terms of R&D, pilot plant and production on the backing of significant inquiries and interest that we see from our customers, existing customers and new customers, which also is validated by the fact that, we have just announced three significant announcements in the last few months.
All right, Aman, we'll leave it there. Thank you very much. Good speaking with you and appreciate you joining in on the program with some of the detail. We'll take a break here. We are back. Mitesh and Sudarshan will be with us with some technical trading ideas. Stay tuned.